Is Bitcoin truly on the verge of its most dramatic surge yet? Or are we teetering on the brink of an unexpected collapse? That is the question buzzing through every cryptocurrency forum right now, and it all revolves around one figure, $105,000. The digital gold we call Bitcoin seems to be locked in a narrow trading channel right around that number. And if you have been watching charts, you might have felt your heart skip a beat every time the price creeps slightly upward or dips just a tad lower. Why the anxiety? Because, historically, whenever Bitcoin has hovered too quietly for too long, something explosive tends to follow. What is really going on here? And why are so many investors biting their nails, waiting for the next move? In this epic deep dive, we are going to unravel the tension building up around Bitcoin's current price behavior. We will find out why the concern over social media sentiment might actually hint at an imminent bullish breakout, rather than a catastrophic downturn. We will also dissect the cryptic mathematics behind that mysterious 1.03% bullish ratio reported by keen-eyed analysts, a figure so low it has them remembering an eventful day in April. In this story, you will discover how collective fear, uncertainty, and doubt, often labeled FUD, may become the key to predicting Bitcoin's next unstoppable rally. So, strap in and get ready, because we are about to explore the relentless swirl of data, emotion, and market psychology that could shape the very future of this cryptocurrency. During this journey, we are going to answer some burning questions that have been lighting up online chatter. Is Bitcoin's stalled momentum a sign that the best days of its amazing runs are behind us? Or is it simply recharging for a rocket boost that might smash through crucial resistance levels? What in the world does a brief historical reference to April 6th have to do with the present? And can a sentiment gauge be so contrarian that it challenges the mantra of buy low, sell high with its own brand of buy when the crowd is trembling? We will also explore how Bitcoin's recent rally from below $90,000 to over $110,000 laid the groundwork for this high-stakes showdown between patient bulls and anxious bears. Finally, we will peek forward at the so-called descending resistance line that looms overhead, threatening to stifle Bitcoin's next upward surge, along with the critical support cluster resting between $102,000 and $104,000. In this special breakdown, we will delve into the details of how retail traders' emotions sometimes serve as that perfect little predictor of a massive rally, the sense of panic ironically giving birth to new all-time highs. We will dig deep into what it means when the ratio of bullish to bearish comments on social media collapses to rarefied lows, especially in an environment where the digital asset is refusing to budge from its seemingly static price zone. We will ask whether hype cycles can truly die, or whether, by the time everyone believes the hype is dead, that is precisely when it is about to kick back to life again. Keep listening, because by the time you finish this narrative, you might just find yourself seeing Bitcoin from an angle you never quite noticed before. Now, let us rewind a bit. When people say $105,000 for a single Bitcoin, it is already a figure that would have sounded outrageous a few years ago. Back then, hearing that Bitcoin traded at merely a few dollars or a couple of $1,000s was enough to draw shock from onlookers who claimed it was nothing more than a bubble waiting to burst. Yet, here we stand, with the granddaddy of all crypto assets resting in a new normal. Some might call this normal the calm before the storm, while others argue it is indicative of a market that has finally matured. As the analysts put it, Bitcoin is in a narrow pattern, a consolidation if you want the technical lingo, and consolidation is usually the run-up to, well, either a heroic breakout or a dreadful breakdown. We must look at the data. According to the widely respected analytics firm Sentiment, the ratio of bullish to bearish comments about Bitcoin on social media has plunged to one of its lowest points in months. A reading around 1.03% might not mean much at first glance. So, let us decode it. When you see a number that small, it generally indicates that people are leaning heavily toward negative or cautious statements rather than enthusiastic support. Does that spell doom for Bitcoin? Historically, the cryptocurrency sphere has shown time and again that large groups of terrified or defeated investors can signal a bottom, laying the foundation for the next upward thrust. In other words, by the time the masses get too scared or downright hopeless, it can mean that most of the selling has already happened, leaving room for bullish momentum to fill the void. This situation is almost a copy of what happened around April 6th, a day that saw widespread panic following looming tariff-related news. Back then, negative social chatter soared. And if you had asked your average crypto enthusiast, they would have probably told you that Bitcoin was poised for another massive tumble. Instead, we saw the asset rebuild confidence and climb upward soon after, creating one of those classic, almost film-like reversals that leave everyone scratching their heads at how sentiment can be so spectacularly wrong. That is what we refer to when we talk about a contrarian indicator. It means that public sentiment, taken as a whole, often moves in the opposite direction of on-chart reality once a certain tipping point is reached. But hold on, we are not here merely to tell you that everything is about to skyrocket. We want to lay the story out fully. Right now, Bitcoin is still pinned near that $105,000 mark, offering only a faint glimmer of potential volatility. On the technical chart, if you have an eye for patterns, you will notice a classic consolidation triangle pinned between the 26 EMA line and a descending resistance trend line that has been pressing down from above. These lines are not random scribbles. They represent the swirling mass of psychology, trades, and algorithms that collectively shape Bitcoin's price. The triangle is an age-old formation, one that many traders interpret as a coiled spring waiting to snap. There is absolutely no guarantee that we are about to see a dramatic break upward. But if a break does occur above $108,000, that is like hearing the starter's pistol for a renewed charge toward even loftier highs. Think about it. Bitcoin has already trekked from below 90,000 all the way to beyond 110,000 in a relatively short span of time. That run might have exhausted some momentum, so this sideways action can be the recharging period. But that recharging period can end swiftly and forcefully. The big question is whether the break comes soon. And if it does, will it be upward through those formidable overhead barriers? Meanwhile, short-term downside risks cannot be overlooked. If Bitcoin somehow slips below the $102,000 to $104,000 cluster, many worry about a renewed cycle of panic. Imagine flurries of selling triggered by automated stop losses, along with incremental short positions from traders who believe the new direction is south. Would that cause a major meltdown? Possibly. Or it might just be a false breakdown, a final shakeout meant to rattle the weak hands before a cunning move to the upside. Crypto markets do love to confound expectations, especially when everyone piles on to the same side of the trade. But let us circle back to the sentiment phenomenon. You might wonder, how can negative vibes on social media actually signal a bullish sign? The logic goes something like this. Whenever the crowd thinks the worst is upon them and starts spamming bearish predictions, that is the moment many short-sighted participants have already sold off, or are in the process of capitulation. A contrarian investor sees this negativity not as confirmation to jump ship, but as a strong hint that the ocean of supply might be drying up, clearing the way for demand to push prices higher. This contrarian approach does not always work, of course, but it has shown remarkable efficacy time after time, particularly in this unpredictable crypto arena. Here is one intriguing aspect. As more newcomers have flocked to crypto over the years, they arrive with plenty of emotion and less experience. That can exaggerate these swings in sentiment. In bull markets, euphoria skyrockets to near absurd levels, while in uncertain stretches, gloom and doom messages fill social platforms. This is where historical perspective becomes your best friend. When you recall how quickly consensus turned negative on that fateful April 6th, only to watch Bitcoin rally shortly thereafter, it is hard not to draw parallels to the extremely low bullish ratio we see right now. You can practically feel the tension in the air. Will we see another mirror situation, with Bitcoin popping off to new local highs just when many people have thrown in the towel? If you are finding this angle fascinating, feel free to give a friendly thumbs up. Every gesture of support is a reminder that we are all in this together, gathering the information needed to navigate the sometimes hazardous waters of cryptocurrency. In a market that thrives on stories, rumors, and occasionally raw data, it is helpful to build a balanced viewpoint. Remember, one of the best ways to stay strong is by tapping into the collective wisdom of the crypto community and then forging your own path with thorough research. The broader macro backdrop is leaning somewhat optimistically as well. Despite all the swirling negativity, Bitcoin's long-term moving averages are still angled upward. Think about the significance of that. These indicators speak to the underlying trend, which remains constructive even if short-term volatility can shake us around. And do not forget, Bitcoin has historically rewarded those who can stomach the roller coaster ride. The resilience of this digital asset is almost legendary by now, surviving multiple so-called deaths declared by skeptics who have long predicted its final downfall. Those same skeptics have watched Bitcoin crawl out of the rubble each time, battered but never broken. What about the dreaded scenario so many fear? Could Bitcoin tumble all the way back down into discouraging territory and remain there for an extended period? It is always a possibility. We see in markets outside of crypto that corrections can be long, drawn-out affairs, taking months if not years to fully play out. If Bitcoin were to breach the 102,000 to 104,000 support, that might start a short-term wave of selling, but such a move does not necessarily guarantee a total implosion. Some even believe a healthy shakeout is a necessary precursor to a more robust run. Still, it is wise to keep our eyes peeled for any sign of sustained lower lows. Let us talk about that descending resistance line for a moment. Descending lines on a chart represent overhead pressure. They show us that each rally is being met sooner or later by enough selling to push the price downward again. When a descending resistance line is broken to the upside, it often serves as a clarion call for technical traders to open new positions. This can create a flurry of buy orders, accelerating an upward move. Combine that with a sentiment pivot, and you can see how quickly markets can reverse from a sleepy sideways motion to an exuberant climb. Let us add another layer to the discussion: fundamental factors. While it is true that a good chunk of Bitcoin's price movement can be pinned on psychology and short-term speculation, there are always underlying developments to consider. As more institutions dip their toes into the crypto space, the supply on exchanges can decline. Major milestones, such as new regulations or expansions of crypto-based financial products, can swiftly change how both large investors and everyday enthusiasts perceive Bitcoin's value. Then there is the never-ending discussion of whether Bitcoin truly is the digital equivalent of gold, a store of value that thrives best in times of macroeconomic uncertainty. These factors do not always show up in day-to-day price fluctuations, but they slowly sculpt the market's broader trajectory. We should underline that we are presenting information and analysis, not shouting instructions on what you absolutely must do. Every investor is unique, each with different risk tolerances, time horizons, and personal constraints. One of the big missteps in the crypto universe is blindly following the herd. When the entire community tilts one way, it is worth questioning whether you should tilt the other. But as always, you want to do so with proper research, input from qualified professionals, and a cautious approach to your own financial well-being. Let us revisit the puzzle that has so many tongues wagging, the contrarian signal. The notion that near-universal pessimism might actually be the best buy signal is not exclusive to crypto. This phenomenon has cropped up in traditional stock markets, commodity markets, and even real estate cycles. The reasons are not strictly quantifiable, but revolve around human nature. People react emotionally, especially when money is on the line, and large groups can swing the pendulum of sentiment too far in one direction. Once that momentum is spent, it can leave a vacuum that results in a fast pivot back to equilibrium or exuberance. That is where we find ourselves. At a time when many are throwing in the towel, the setup may be ripe for an unexpectedly sharp move higher. That April 6th meltdown paranoia, revisited now through the lens of extremely low bullish sentiment, is a prime example. Let us also acknowledge that we can sometimes talk ourselves into believing a narrative. On social media, negative sentiment can spread like wildfire, especially when headlines appear. In the world of crypto, those headlines could be anything from a regulatory crackdown to news about whales selling off large chunks of Bitcoin. The critical question is whether the panic is genuinely warranted or if it is an overblown reaction that, ironically, deflates the balloon of negativity just enough for a fresh upward draft. Another concept to appreciate is the idea of volume. If the price is moving sideways, we want to see what the trading volume is telling us. Low volume might mean that neither buyers nor sellers are particularly motivated, which can lead to unexpected bursts of activity the moment news hits or major trades are executed. High volume can be a sign that big players are positioning themselves or that retail investors are pouring in. When combined with sentiment and technical patterns, volume can be a key puzzle piece in determining what is about to happen. Keep an eye on it, because if Bitcoin's volume picks up strongly when it attempts to break over that descending resistance line, we might see a real fireworks display. Now, let us look at the psychological side. Cryptocurrency can be stressful. It is not just about charts and new investor perspectives. It is about personal fortitude. Many newcomers, after being enticed by stories of overnight millionaires, find themselves unprepared for the volatility that follows. They watch their portfolios yo-yo in value, sometimes multiple times a day, witnessing gains evaporate or losses mount in a blink. This environment cultivates emotional extremes, feeding into the cyclical rise and fall of optimism and despair. In that sense, one might argue that these cyclical waves of sentiment are an inherent part of Bitcoin and might remain so for a long time. Now, here is a bit of good news. If you are already intrigued, consider subscribing to keep updated on future insights and analysis. Try not to let the daily churn of price fluctuations wear you down. By staying informed, you place yourself on more solid ground, able to sift through hype and steely gloom with a balanced mindset. That alone is a valuable asset in a market that moves at lightning speed. But is each bullish or bearish sign guaranteed to become a self-fulfilling prophecy? Not always. In truth, every major breakout or breakdown is shaped by dozens of variables. Sentiment might be the spark, but actual momentum requires fuel from traders of all sizes. If the contrarian premise is correct, we are now in the middle of a worst-case emotional trough, which ironically is fertile soil for the seeds of a new rally. Do not, however, overlook the possibility of a fake-out, which can happen if enough short sellers manage to push the price below that support cluster, around 102,000 to 104,000. In that scenario, the gloom might become overwhelming, at least temporarily. Still, the bigger picture remains that Bitcoin, having climbed from obscurity to these six-figure levels, has proven time and again that it can mold itself into new shapes as the landscape shifts. If you had told early adopters that Bitcoin would one day consolidate around $105,000, they might have laughed and called you crazy. Yet, here we are, discussing how stable it looks at these ranges, as if that is a normal state of affairs. The question becomes whether it will catapult to new heights that will once again redefine what normal means, or if we are stuck in a plateau that might dampen the market's excitement. Crucially, corporate interest and mainstream recognition have both grown. Some major institutions now hold Bitcoin on their balance sheets, believing it to be a hedge against economic turbulence. Others remain skeptical, but each time a big name signals interest, it adds a layer of legitimacy to the crypto space as a whole. This is part of why the contrarian notion remains so compelling. As negative talk and short-term focus swirl online, behind the scenes, strategic players might be accumulating Bitcoin with the belief that its long-term trajectory is still up. Over time, that demand from deeper pockets could help spark the next surge if a wave of optimism also returns among smaller traders. The contrarian viewpoint suggests that such a wave might be lurking just around the corner when you least expect it. Reflect for a moment on the broader market environment. We have seen global economies fluctuate with changing policies, supply chain disruptions, and central banks adjusting interest rates. Bitcoin is not immune to macroeconomic forces, yet it also does not abide by the rules typically governing fiat currencies and traditional assets. Its finite supply aspect is frequently touted as a powerful factor that sets it apart. So, each time fear runs rampant, one of the underlying arguments is that the coin's scarcity might eventually become a magnet for higher valuations, provided that demand does not evaporate. Let us say Bitcoin does break above 108,000 in a convincing manner. From there, the next psychological milestone might be retesting that 110,000 area or blasting through it if buyers come flooding in. Momentum can be infectious. One of crypto's hallmarks is how quickly excitement can spread, pulling in new money from all corners of the investing world. A price of 111,000 or 115,000 does not seem so daunting if that wave takes hold. Yet if the break fails and price slumps back into the triangle, we might face a drawn-out wait until the next big catalyst arises. The mission here is not to spoon-feed you a direct conclusion, but to lay out the drama unfolding. On one side, you have the bleak sentiment on social media, historically known to be a bright green light for contrarians. On the other side, you have the technical pattern that could provide either a rocket-like breakout or a deeper dip. Meanwhile, the fundamental story remains strong for Bitcoin diehards, who assert that in an inflationary fiat world, a finite digital currency is bound to flourish over time. This mosaic of indicators forms the puzzle you, as a participant or observer, get to piece together. So, how best to prepare? If you are a trader, you might watch for that decisive close above the descending resistance line, accompanied by a surge in trading volume. If you are an investor with a longer horizon, you could see the present gloom as an accumulation phase. Or, if you stand on the sidelines entirely, you might be content simply observing how this grand experiment plays out. Whichever camp you fall into, it is key to remain level-headed and continually educate yourself. Crypto is still a wild frontier where knowledge can be the difference between capitalizing on an opportunity and running headfirst into a pitfall. Therefore, if you find yourself riveted by these questions of sentiment, technical breakouts, and the undeniable lure of Bitcoin's potential, keep your eyes peeled. As the market continues to churn, so do the opinions swirling online. They might all be pointing to gloom, but time has shown that gloom can be fleeting. Especially in an asset that thrives on unpredictability and breakthroughs. No one can know for certain whether we will see a breathtaking new peak in the coming weeks or a sobering correction, but that is precisely the drama that keeps so many of us watching, analyzing, and, yes, even hoping. This is the story of Bitcoin at $105,000, a digital phenomenon that hums with possibility. Will the negativity fueling social platforms transform into a rocket booster, launching the coin to 108,000 and beyond? Or will the contrarian signal fail us this time, leaving us stuck in a quagmire of sideways action and potential dips? The only guarantee in Bitcoin is that no moment of calm remains for long. So, buckle up, stay vigilant, and brace for whatever lightning bolt eventually strikes this market. And if you enjoyed riding this wave of insights, consider showing your support by joining our ongoing exploration of the crypto universe. After all, the more perspectives we gather, the better chance we have of piecing together the puzzle before the next thrilling chapter unfolds.